How to start Forex trading. Hello trader, this is Igor from FX Igor YouTube channel, and today we'll talk about 12 steps to master Forex trading. So this video is presented from me to you beginner traders, and I want just to show you some 12 steps that you should apply before you start live trading. So let me start from the beginning. First, when you talk about trading, you see thousands and hundreds of traders around the globe. They trade a lot and they have big salaries, etc., etc. However, the truth is completely different. Only a couple of % traders that work in big corporations, they have big salaries and a lot of money, and all other retail traders are usually, this is the not so well paid job if you watch as a job. And majority, I think that around 90% of all traders lose their money in trade, and it is because of the poor risk management usual. And you need to decide to go in Forex trade, not to become a rich person. You want to Forex trading or any kind of trading if you really want to learn that and enjoy it. And this is the very, very important concept. So the first step is make a trading decision. So you need to create a decision to become a trader and that you want to learn about, and you want to create some kind of commitment to that. And my advice is to push yourself and to first find a couple hours per week, maybe more than that, maybe a couple hours per day, so you can every single day learn about trading. The next step is to learn technical analysis concept. Actually, to learn technical analysis as a part of the science. And for example, you can read Technical Analysis of the Financial Markets by John Murphy. So when I cooperated with people in dailyfx.com, it was more than 10 years ago. There was a kind of expert on demand, and I had opportunity to talk with real traders every single day and ask them a lot of questions. And I remember David Song and Michael Buttress and a lot of people that work there, maybe work still today. And I always ask them, please, can you tell me some good book, good Forex trade, good trading book, please tell me. And they always tell me this excellent advice that a college book that people from the biggest faculties that today are big traders always start is John Murphy Technical Analysis, because in that book you can find 95% of all knowledge related to technical analysis, important knowledge that you will need in your life. Of course, during your experience you will connect some dots, and maybe you will go maybe in machine learning, maybe artificial intelligence, maybe some other scopes that are not part of this book. However, this is excellent book for beginner trader. It's an excellent book for any trader, and really you can learn all basic stuff about tech. Now, the next step is learn fundamental analysis concepts. There are a lot of books, but it's not important the books. It's important you can read website articles, stuff. The biggest issue is to understand what impact price. And for example, for currencies, you will have, for example, industrial production, GDP. You will see that non-farm payroll. You will see a lot interesting economic news, and you will see a lot of reports, and you will see how that reports impacts on the price. And this is something that's important, because something needs to push price up or push price down, and this is very important, like I said. And this right now you see fundamental analysis, but for gold. Why? Because if you want to analyze gold, for example, you have to understand the fundamental analysis of gold. For example, global money supply, gold production, global imbalances, supply and demand, global inflation, and how inflation and gold price are correlated, jewelry industry, what is the value of US dollar, because if the US dollar very strong, gold will go down, etc., etc., interest rates and everything. So it's complicated. You don't need to know exactly everything and every single report, because what you will do with that report. But the thing that's important is to understand the basic concepts. And usually when a lot of fundamental fundamental impacts go in one direction, then price will go in that direction. Everything is correlated. We just give example. If we have excellent industrial production, there's a high probability the GDP will go up. If the GDP go up, so other reports will go up, and everything will go up, and whole economy will going up, and currency will go up. So usually it is something like that, and you just need to see predictions, reports, and how market sentiment and what's happened there. The next step number 4, is the step when you need to decide to open a Forex demo account. And this is a very important step because it's a practical thing. Now you read a lot about technical analysis, fundamental analysis, you know a lot of stuff. Now you just need to open a Forex demo account. Of course, if you want to open a good account from regulated broker, just below this video you can go and you will see the links that I just put it down there, and you can get a good bonus. But whatever broker you find, it's okay, especially for demo account, because demo account is just like a paper trading, just a virtual money. And this is important because you can practice in a real environment. You don't need to risk your money. Number 5, make the first trading position in empty trader 4. Of course, a lot of traders today in Forex industry always start with MetaTrader. Why? Because it's the best platform. It's free of charge. You just download and you can press the button. This is it. And this first step is symbolic and very important for every single trader. So right now you can open a demo account. You can just put a euro-dollar chart and press the button sell or buy. So in this step, it's a very, very important thing that you need to understand, just as the lesson number 1 in trading is that you always have free positions. You can buy, you can sell, and you can be flat. So sometimes decision not to buy or decision not to sell is excellent decision. And you need to remember that, because that advice will help you a lot of time in your career. Now number 6, you just open a demo account, you read a lot of books, you're ready to start. How to start? The first thing that you should do as a beginner trader is to watch only 4 hours daily and weekly chart, maybe monthly chart. So this is the high time frame. Why is that important? It's important that time frames are very slow. You know, price will not change so fast on daily chart. Patterns, setups, very slow on daily chart, on 4-hour chart. You know, for example, to see the new candle, you need to wait 4 hours on a 4-hour chart. If you want to see new daily candle, you need to wait another day. And because of that, because there is no speed, everything is a simple, slow down, everything is fine. This is the very, very good beginning just to trade on this kind of higher time frames. In the first step, you should try to develop your easy trading strategy. The trading strategy for the beginner trader should be very, very simple. You can choose a free kind of approach. The first one, you watch right now, you can use patterns on the chart. For example, one of the patterns is a bullish engulfing pattern, and it's a symbolically pattern that just shows that the high probability is to see the bullish trend after that pattern. And you just need to practice and watch charts, naked charts with any kind of indicator, and just look for patterns, look for some interesting facts, and see how that impacts on the market, etc., etc. In the beginning, this is the very good thing. Of course, except to use patterns and patterns analysis, you can develop an easy trading strategy using some indicators. For example, on the chart, you can put moving averages. It's not a perfect strategy. It's very hard to adapt, but the principle is very simple. You put one slow and one faster moving average, and you wait to cross each other. And when they cross, you can spot a bullish or bearish trend and maybe some entry position. And usually traders like to use 200 moving average on a daily chart, and to add some other like 100, for example, or 50. And using that 2 moving averages to trade, you find some beautiful setups. For the beginning, this is very, very easy setup, and you can use to practice your trading in the first days of trading life. And the last one that you can use if you want to make a simple strategy, to use some oscillator, relative strength index or MACD, or two the most famous oscillators. Right now you see MACD line, and you can see that when MACD line cross, it's a beautiful entry position, and then you just follow the main trend, and when the trend ends and the MACD lines cross each other again, you can close your trade. Number 8, when you practice this higher time frames, you can start to go to the low times. What it means, the trend is in some kind of cycle. All the time we have a bullish trend, bearish trend, but when you have a bullish trend on the lower time frames, that bullish trend can have bullish down, upper down trend time. So for example, on this image, you can see 4-hour chart with buy and low trends lines, and you can see that the red one is the moment when the price is falling, and the blue one when price is rising. So what you can do, you see the higher time frame 4-hour chart, and you see that the trend is bullish. So you want to buy. But when you want to buy, when on the lower time frame, for example 15 minutes, you can see some huge drop, or that on the 15 minutes chart we see that the price on some strong support. Then it's a perfect time to enter into buy trade, because you want to follow the main trend, the bullish main trend for the 4-hour chart. As you can see right now on this picture, we want to find a bearish downtrend, wait, touch support, some very low price, and buy on that price and try to achieve the new high. The question for you, where should you put the stop loss? For example, the stop loss should be the previous low. This is the perfect moment to close the trade, because if the previous low is broken, that means that the main trend is not valid anymore and you should not trade. So the stop loss should always be the previous low for buy trade, or previous high for the sell trade. So this kind of strategy a lot of traders use in daily and in the routine, and I think that the 90% of all strategies are some kind of variation of this kind of strategy. Of course, I want to add there is a lot of strategies that you buy from the high and sell from the low, and there is a lot of different approach in trading, but this is the one of the most common that you can see either to retail traders, and especially for big dogs and institutional traders. Why? Because institutional traders like to buy very low and sell very high, because they have a huge positions and they want to earn on that. Number 9, improve multi-time frame trading. Now, when you know to use the higher or low time frames, you can switch all the time and analyze the market and make a lot of combinations. For example, traders like to use 1-hour chart and 50-minute chart in combination, or 4-hour chart and half-hour chart in combination, or daily chart and 1-hour chart in combination. And you just switch one higher time frame on the lower time frame and make plans about your future trades. Number 10. Now it's a very, very important decision for you. It's to specialize in some assets. What it means is you should pick, for example, I live in Europe. During the European time, the best for trading is euro dollar and British pound dollar. And I'm trading euro dollar and British pound dollar. This is my major two Forex pair. Of course, additionally I add others, but I monitor every single day these two very important for me. A whole day I monitor euro dollar and British pound dollar, and sometimes I like gold, but usually longer term trade. So I specialize in couple assets and I'm trading them all the time. I like major pairs. I like all crosses with US dollar. I like a lot of assets, but a couple of them I try just to specialize there and to be in some sweet spot. Number 11, put it all together. Now, when you specialize, you know technical fundamental analysis, you have a lot of demo account trades and a lot of things. You just need to practice how to create some algorithm. For example, first on the beginning of the week, I analyze the fundamental analysis. I analyze what's the market, what is inflation, GDP. I develop and create some major trends for assets. Then I use the technical analysis. I use opening range theory. I use a lot of important price levels for that week. So before the week starts, I have important price levels for my euro dollar and British pound dollar. I know what is the lowest low, highest high, what is the very strong supports, very strong resistance, etc., etc. And then I create my plan. Will I trade swing trades, a couple days, maybe position trades, maybe short time trades. I make some decisions and I try to put all together all my skills that I have if I want to be a good trader. And number 12, you're ready for live account trading. You can open a live account now, put some kind of deposit, for example, at least my recommendation, at least $500, because the risks, and try to risk at most one micro lot. That's too much too, because you need to be very, very low risk. The perfect risk is less than 1%. And like I said, this channel is not investment advice or something like that, but I will always advise you to risk low, because the risk can be a huge problem, and it is the biggest problem for retail traders. So just think about risk all the time and try to risk low, to risk small amount of money when you trade. If you open a live account, try to be concentrate, maybe one trade per time, not more, and try to really risk in micro lots, not to risk a lot of money. Even you practice on demo account, because trading is a really devil job, and you can lose more than you can afford very easily because of high leverages. So just keep risk low and try to be nimble, very nimble, to switch from one time frame, to set the stop loss, to be nimble and ready to close trade when you see that you are wrong. Because a lot of beginner traders, they just run losing rates, losing trades to go down and lose all the money, and try to cut the profitable trades very early. And this is something that you can change only in practice and the strong mental strength. So this is it. I hope this 12 steps can help you in your life, in trading life, and I hope that you will enjoy my future videos. I wish you a great day, and bye bye.